Is now the RSI backtest concluded, and what we can see is it's Hello everyone, and welcome back to Statia Trading. We are now in part 3 of how to conduct a backtest, and this one will be the end results. What I mean by this is in the last 2 videos, we have found and built a system that has a slight edge, but now we want to see if we can improve this edge by applying different filters and changing the risk to reward ratios. And hopefully by the end of this, we can come up with a good system. So without further ado, let's jump right into it. So stage 3 is the optimization process. This is where we are going to see if the edge is good or not. So we are going to do this by testing 2 different filters, as well as different risk to reward profiles. And hopefully by the end of this video, we might have a good result. So the 2 filters I'm going to apply are basic ones, and they are the RSI and the exponential moving average. Now, if you don't know what these are, just Google them. They're very straightforward to understand and quite commonly used within trading. So the RSI, we're going to use that to create a sort of mean reversion strategy around the smash day, and the EMA we're going to use for trend following. Now, I'm just waiting to go build these models in MetaTrader 5 so you don't have to, and then we will jump into the MetaTrader 5 platform and then do some testing. So back in a minute. Okay, so I have loaded both the files from FXstream in, and you can see here is YouTube Smash EMA and YouTube Smash RSI. Now, before we dig into this, we'll just go on to the inputs, and I'll show you exactly what we're testing. So we are going to be testing 1% per trade, hence the risk is 1. The target is 100, meaning it's going to be a 1-to-1 risk to reward. The D1 is just the time frame we're going to be testing on. We're going to be testing it on the daily because that's what it is. M30 here, this is just simply going to be the stop loss size. So what I didn't mention in the earlier part is, with most of our strategies here at Statia Trading, we tend to use an average true range as our stop loss because this goes along with current momentum and like the current volatility in the market. So we like using that as a stop loss. So we're just going to keep that to the daily. R2, new stop loss, both just ignore these. These are just for a later management style that we will test in the future for it. But yeah, simply all we're going to do is test on euro dollar between 2015 and 2013 and let the test run. Okay, so the test is now done, and what we can see is with applying the EMA, we've got a lot less trades because we're trading in one direction, but our profitable trade percentage has actually dropped to 48.31%, meaning at a 1-to-1 risk reward, it's got a negative edge as we lost 5.7% over those 118 trades. So what we can conclude from this is not to apply the 20 or 50 EMA. Let me double check. The 20 EMA. We can conduct a test with the 50 EMA, but I'm not expecting too much different results. So we'll now move on to the RSI test. Now, before we move on, if you don't want to go through all the hassle of backtesting, trying to find a strategy, then we have the solution for you. We have our own backtested and proven algorithm, Sequenti, that anyone can sign up and use. We're away to come out the beta phase, so the prices will be going up at the end of the month. Now, if you don't think the algorithm, if you're the right fit for the algorithm, we do have an EA assessment tool. Link will be in the description, and it will tell you whether you're the right fit or not and what you need to go do some more research on. So if you're interested, please visit our website now. So that is now the RSI backtest concluded. And what we can see is it's pretty sideways, and let's have a look at the results. So 57 trades, that's not a lot of trades, but our profitable trades are 52.63%, meaning that it passes our monkey phase assessment. So out of the 2 that we've tested, this one is showing a lot more promise, but then again, it is taking a lot more less trades, meaning we don't have the biggest sample size. But we'll just go with this, and what we're going to do now is we're going to go to our inputs and just apply different types of stop losses. So I'm going to do a slow algorithmic test. Now, what we're going to test is different ATR stop losses and different targets. So I'm going to start at 100, put it in steps of 100, and we're going to stop at 300. So we're going to test 1 to 1, 1 to 2, and 1 to 3. Next, we're going to see what is the best sort of stop loss. So we're going to use the 1 hour ATR stop loss all the way up to the daily. So this will run 24 tests and we'll get 24 different set of results. So I'm just going to start this. It can take a good while for this to complete. So once it has complete, we will come back and see the results to see if we have actually built any viable sort of system. Okay, so while we wait on the multiple scenarios to complete, I just want to have a little chat with you about expectations. This is something that you need to get your head around. Every idea will not result in a winner. It's going to take a lot of hard work and persistence to create multiple strategies that are worth trading, especially if you're new to the game. When it comes to strategy development, you could try 1,000 different ideas, and maybe only 4 or 5 have a slight edge. And from those 4 or 5, maybe only 1 is actually worth trading. We know this ourselves because we're telling you from experience, and others will tell you the exact same thing. But strategy is not the most important thing. Strategy is only one piece of the puzzle. If you think about a lot of new people when they come into trading, the first 2 things they think about is strategy and money. If you don't focus on mindset, risk management, and patience, these 2 things, strategy and money, will eat you alive because you'll always be chasing the money and you'll always be changing strategy. Now, if you're an experienced trader and what I'm saying you're doing, then you just fall into that sort of void where you're always changing and you're actually seeing no results. Now, if you read a lot of books on different traders or podcasts, you will see that some of the best traders in the world have traded the exact same way as they did 10, 15, 20 years ago, because they know strategy is not everything. If you have good discipline, trade management, and patience, an average strategy can still make a good return. Anyway, enough chat. Let's take a look at the results. So this is now the test results. On this graph here, you can see all the different dots are different results, and here are all the results down below. So we had 24 scenarios, and as we can see, most of them are not profitable. But we do have 1, 2, 3, 4, 5, 6, 7 out of the 24. Now, for me personally, if we only have 7 out of the 24 scenarios, I wouldn't be looking to trade this live because more often than not, in different situations, in different circumstances, it's going to make a loss. But we can have a look at some of the results, and the top one being a 6-hour ATR with a target of 1 to 1, returned 5.4% and had a drawdown of 5.37%. So again, it's not something you'd want to trade because, again, it's like a 1-to-1 risk to reward. So it's just not the best set of results. But one thing that we can conclude from this is rather than wasting any more time on the strategy, we can just put this to the side and move on to the next one, because that is one thing that you need to actually do. More volume in terms of testing can result in lots of different ideas, and this can actually make you find better strategies. So that is now our backtest complete, and we've tried 2 different filters and different risk to reward ratios. And what we can say is neither of these systems are actually of any interest of us to use. So we're just going to bin them and move on. As I said previously, it can take quite a few different ideas before you find one that works. And that is one of the reasons that we've made this video. A lot of people across YouTube and everything else make trading come out to be simple. Now, in the essence of how you trade, it is, but it's very hard to find something that works consistently through different market cycles and different conditions. So, it can take a long time before you find any good ones to add to your portfolio. But there are systems out there. We just have to keep digging and eventually we will find one. So that is the end of our three-part series on how to conduct a backtest, and I hope you've enjoyed it. There was a lot we went over the past three episodes, but there's a lot of value to be taken, and I hope you apply some of these methods to your own backtesting. Now, if you have enjoyed this video, please give the video a thumbs up and subscribe if you want to see some more content. Next week, we're going to go over a dollar cost averaging strategy. Both Jacob and I use it and can vouch for it. But until next week, we hope you have a great day and we'll see you in the next one.